here's your outlook for interest rates through the month of December. We'll talk more about kind of the turning point in November, but we're suggesting a float for this month, and we feel pretty confident with it, and we have a confidence score of 7. This week we saw a lot of interesting information come out, most of it being the Federal Reserve on Wednesday, which was finally turning the corner and discussing why things had slowed and that they would consider less of an increase in future rate hikes. So this is kind of the turning point that we were really hoping for, and it did play out as we expected, which the markets did react in a favorable position, at least for the bonds and mortgages. So it was kind of the turning point that we had hoped for. I think what we're going to see in December is kind of a tug of war, and the tug of war is going to be between, is there economic data that suggests that it's stronger than we think, or is it truly weakening like we have anticipated and expect? So there's going to continue to be volatility. I know I've said that every month, but that's going to continue, and it's probably going to continue for a while. Another thing to really keep in mind is December. And the month of December is very unusual, and it's because productivity and reductions in the workplace are a little bit skewed a bit. So with spending and holidays and people taking time off of work, there's favorable numbers in terms of economic and spending and consumer growth in this month. Also, there's a lot of workforce reductions that will be delayed a little bit. We've already seen a lot, especially in the fourth quarter here, and that unfortunately is going to continue. But what we're going to see is, in some cases, companies are going to wait until January to continue their reductions, especially as things slow down and people go back to work and spending dissipates and it's somewhat of a more normal sort of balance. So typically the first quarter is slow for real estate in general. It's the slowest quarter of the year. So I think that's going to play into some of the things that will unwind later in the first quarter. So as we've seen before, immediate reactions to the market with stimulants in terms of monetary policy takes a little bit of time to develop, and a lot of the things that we saw happen 3 months ago are starting to play out now, and I think we're going to continue to see that. So again, January is going to be a lower month in terms of productivity. There's going to be continued reductions in the workforce, and I think that's going to continue to play out in March when we get to those numbers and we'll start seeing a significant decline in inflation and all the other things that the Federal Reserve is trying to impact. So I hope this is helpful. Again, I always look forward to your feedback and let me know what we can do to help you in any way. And hope you have a good end of the year, and we'll look forward to seeing you again in January. Thanks.